Every year, millions of startups are launched with high hopes and even higher ambitions. But the data tells a different story. Most of them will fail, not because of bad ideas, but because of structural mistakes. Within 3 years, the majority disappear. This is why startups collapse. The culture of entrepreneurship is often romanticized, filtered through pitch decks, late-night hustle, and the lure of venture capital. We chase the dream of the unicorn valuation, but behind the excitement lies a brutal reality. Execution, not just ambition, determines survival. Many founders fall into the trap of believing that funding equals success. In reality, funding is not profit, it is simply runway. Without a strong revenue model, funding only delays the inevitable. Burn rate becomes the silent killer, slowly draining the lifeblood of the company. When cash runs out and investors pull back, the momentum stops. The company doesn't just slow down, it collapses under its own weight. A startup can build an incredible product, technically flawless and visually stunning, but if the market does not need it, the engineering is irrelevant. Founders often fall in love with their ideas instead of solving urgent, painful problems. They build for themselves, not for the customer. Without true product-market fit, growth stalls. The initial hype fades, and the momentum disappears as the market remains indifferent. Some startups are victims of their own early success. They scale too fast, hiring aggressively and expanding operations before the foundation is solid. They increase expenses and overhead, assuming the growth will continue indefinitely. But scaling doesn't fix weaknesses, it magnifies them. Small operational cracks become structural failures. When the market shifts, the heavy overhead becomes an anchor that drags the entire ship down. Leadership is the invisible glue of any organization, yet many founders lack the experience to manage complex, growing teams. Decision-making becomes emotional rather than strategic. Hiring mistakes compound, and internal conflict begins to rot the company from the inside out. Even the most revolutionary ideas will collapse under unstable leadership. Without a captain to navigate the storm, the vessel is lost. Markets evolve with ruthless speed. Competitors analyze your every move, copying your best ideas and improving upon your weaknesses. Larger, established companies with deep pockets can enter your space overnight. In this environment, timing is everything. Being too early to a market can be just as dangerous as being too late. You must hit the window of opportunity with surgical precision. Startups fail because they ignore the fundamentals. They prioritize hype over cash flow and passion over market demand. True success is built on execution discipline and strategic patience. It's about building a structure that can withstand the weight of growth. Most startups fail, not from a lack of vision, but from a lack of systems. Understanding why they collapse is the first step toward lasting success. This is Capital Blueprint. We analyze the architecture of modern empires to understand how they are truly built. Subscribe if you want to understand the strategy behind the success. Build something that lasts.